Hello all, my name is Ro, and today I will be talking about your company's accounting records explained. Short version because we will be concentrating on a specific topic, which will be trial balance sheets and balance sheets. So first, let me take you through a little introduction of what all of this entails, as well as the major accounting concepts that will go into the idea of a trial balance sheet and a balance sheet. So first, we need to understand what an account is. And it is basically a record of increases and decreases in a specific asset, liabilities, equity, revenue, or expenses. On the other hand, we have the ledger, which is a record of all of the balances of each of the accounts, assets, liabilities, equity being accounts. So accounts are organized by the accounting equation, which is assets equals liabilities plus equity. Therefore, liabilities plus equity equals assets. It is also important to note that and understand what T account means. And this is basically the idea that if you take from somewhere, you need to add somewhere else, and vice versa. And this enables you to have a better cash flow within your business. So, for example, if you're a business owner and you invest $20,000 into your company, you would not only add $20,000 to the cash asset account, seen as a debit because it's a plus, but you would also record the fact that the owner's capital has now decreased, seen as debit, by $20,000. So in order to expand on this idea, let's take a quick overview of the major concepts you need to understand for a successful accounting experience at your company. There are three types of accounts: assets, liabilities, and equity. And within assets, you would account for things such as cash, land, accounts receivable, prepaid accounts, supplies, equipment, etc. Within the liabilities account, you would account for accounts payable, notes payable, unearned revenue, accrued liabilities. And then we would have the equity account, which accounts for plus common stock, like the example from the previous slide of an investment of $20,000, minus dividends, plus revenues, and minus expenses. So using the T account and double entry accounting method, where you track where you are taking from and adding to, as well as where you are adding to and then taking from, this allows you to have a better understanding of not only the accounting equation itself, but your finances overall. And it would also enable you to have balanced books. Because again, if you take from somewhere, you must be adding somewhere else, and vice versa. Now, how one would track this is what we are going to be looking at right now, which is the trial balance sheet. The trial balance sheet lists all ledger accounts and their balances at a point in time. And this is usually done in a list that presents an order from most liquid to least liquid. The trial balance practices a double entry method that we spoke about before, and it's supposed to balance your debits and credits. So if you sum up all of your debits and you sum up all of your credits, they must be equal. If they're not equal, that means that there are errors and your books are not balanced. So we would have to go back into our trial balance sheet and see where those errors could be. And there are many different types of errors that one can do. Like, for example, putting something in debit when it was supposed to be credit, or credit when it's supposed to be debit. And there's other examples as well. So one must be careful while recording and tracking all of the financial movements within the company throughout the year to be able to have a successful end of year when creating a balance sheet, which we will be talking about in a little bit. So the purpose of the trial balance sheet is to give your company the opportunity to prepare financial statements at the end of the year from it, whether it's an income statement or a statement of retained earnings, a balance sheet, or a statement of cash flows. The purpose of the trial balance sheet is to overall ensure that the accounting equation is in balance for your company. So here to the right, I made up a fake scenario, fake numbers, they mean nothing, but it's just to better illustrate and give you a visual look of what it feels like, what it looks like, and what it's supposed to be doing. So as you can see in the example, at the end of December 2023, the fiscal accounting year, the sum of all debits and credits balances out to be equal. And the list is hopefully from most liquid to less liquid. So how important is a trial balance sheet, and how or why do we need it to prepare these financial statements from it? Well, there is something called the balance sheet, as I mentioned earlier, and this derives from the trial balance in hopes of allowing companies to understand their financial position at a specific point in time, a specific date, and that being the end of the fiscal year. So the balance sheet does not show revenues or expenses like a trial balance sheet. However, or it rather reports the types and amounts of each account, including accounts such as assets, liabilities, and equities of a business. And yeah, so while the trial balance compiles and tracks all of the finances of the company throughout the year, the balance sheet has the job to later grab all of this information and almost like sum it up, taking into account that a balance sheet does not include expenses and revenues. It is just an overview of the account's total assets, total liabilities, and total equities, right? So we also need to know that a balance sheet is known to be a legal statement of the financial position of your company at the end of the financial year. So that takes us to the idea or the fact that a trial balance sheet is for internal use throughout the year. You're using this to input all of the movements, blah, blah, blah. And then the balance sheet is that summary or overview that tells you the financial position of your company at the end of the year, and this can be used publicly, the balance sheet, to showcase this. So yep, that pretty much sums it up very well. Finally, I'm just gonna say that again, it is important to be conscious of the fact that the trial balance sheet is supposed to help you prepare your end of year balance sheet and ensuring that the accounting equation holds true, and that when you add all of your trial balance accounts, the accounting equation is equal. That would just go to show that your books are in order and that everything is good. So as you can see, overall, it is crucial to track and report all of the financial movements of your company throughout the year to be able to, at the end of the year, get a better understanding and bigger picture of the financial state of the business at a point in time, being end of year. Thank you. And these are my references. Good night.